The stock market is at an all-time high and has had one of the best rallies in history, up about 28% since the tariff panic that we had in April. Do you remember that when everyone was screaming, sell your 401ks, we're going to have the worst stock market crash in history? Well, that turned out to be the signal to buy stocks. Now keep in mind that just because the stock market is hitting all-time highs, it doesn't necessarily mean that the economy is doing better. The stock market is a forward-looking mechanism, and as it stands, they are anticipating 6 rate cuts really within the next year, the first one being in September. Now obviously that is going to be very data dependent, and if inflation is continuing to trend down to 2%, and if the unemployment rate goes toward 4.5% or maybe 5%. But the stock market does actually have an impact on the housing market. People tend to invest in the stock market over time as a means to build up their down payment to buy a house, whether that be 5, 10, 20, or 50% down. A lot of people have their down payment in stocks. When we had the tariff panic in April and stocks were down around 20%, I spoke to a lot of title and escrow companies, and they said a huge amount of people backed out of escrow because their down payment was in the stock market and they could no longer hit their down payment percentage because stocks had dropped so much. Now it's possible a lot of those buyers are actually going to re-enter the housing market as they're going to look at their accounts and realize that it's up almost 30% in a matter of 2 to 3 months, which is a pretty substantial increase. And people are looking to diversify from a higher risk investment like the stock market into lower risk like real estate. Let me know your thoughts in the comments and follow me for more.